Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we're going to learn a concept which is known as petty cash. We're going to learn the meaning, we're going to see the template and the accounting with some examples. Let's start with this. At the very beginning, you need to learn exactly, that every organization in this world, they require cash for their day-to-day expenditure, and not every expense can be paid through bank or bank transfers. So the tiny expenditures, like the small expenditures, they need to be done, needs a settlement through cash only. And at the same time, few receipts needs to be settled in cash, such as, like, scrap scrap sale basically. So in that case, you'll be dealing with cash only. So in almost every organization, petty cash is important and integral part of accounting function, and mostly taken care by the accounts personnel only. And in this tutorial, we'll look at petty cash and the petty cash accounting in detail. At the very first end, we'll start with what is petty cash. Now, when we talk about what over here, petty cash is a very small amount of cash. It needs to be kept in the office for utilization of daily small expenditures. So a person who is in possession of the cash in the organization generally is called as the cashier. And the same person is responsible for the appropriate accounting of each transaction. The cashier is only accountable for the all the transactions. Now, all the incomes and the expenses which are practically not possible to settle through bank needs to be settled through none other than cash. So there is a, you can say, there is no barter over here. There's no barter over here in the modern economy. See, generally some of the expenditures, are paid in cash. Like, I'll start with some day to day daily snacks, or for the snacks or tea or coffee for the employee, right? This can be the first example of that. The second can be, any sort of employee reimbursement, if any, right, which includes your, your occasional traveling and other expenditures from convenience and so on and so forth. Then you have the bank charges small bank charges, like, over here, franking. You have notary. Okay, so these are some of the expenditures. I'll go for the last one, like, for sending greetings or sweets. Some of the very petty expenses. This is for the Diwali or some other festivals. Now, few incomes which may be taken into cash are something like this. This for the expenses that were discussed. Now we are going to discuss some of the incomes that are responsible over here. The scrap sale, which we just discussed, of it can be small amounts of any unorganized to the unorganized vendor, and sale of old newspaper, right? So usually an organization estimated their periodical requirement of cash, so that is, weekly or monthly. According to that, they approve a limit which can be withdrawn from the bank from time to time to settle the cash expenses. See, a limit of the a cash possession with the cashier shall not exceed at a given point of time as approved by the management of the organization. So the periodicity of the withdrawal, you can say that the periodicity of the withdrawal from the bank may differ from organization to organization as per their requirement. But you can see a small shopkeeper needs more cash rather than the middle or a big size organization, as he needs to deal with more unorganized sector who deals in cash only. Now, for smooth transaction through cash, three persons are the part of the transaction. The first is the cashier, who is actually the preparer of the, I mean, the cash accounts. Second is the authorizer. Okay, over here it's the higher management, and the third is the receiver, basically, which is the person who has claimed by. Right. So these are the three parties. Now, what is exactly the role of the cashier? Now, see, cashier is generally most trusted person in the finance team as he possesses the cash of the organization. So his job starts from withdrawing the amount from the bank to settle the expenses, and generally includes accounting portion. Okay, for the same. So we can summarize the job of the cashier like something like this: withdrawing the amount from the bank in the permissible limit on time to time. Then vouching, or we can say accounting the authenticity of the expenditure, making the payment of the same, and post checking any appropriate approval is been taken or not. Third is creating any petty cash voucher for each payment in cash, and attaching supporting of the same to that. If reimbursement of the employees is paid for travel expense, then travel ticket should be attached with the voucher. The fourth is passing appropriate entries, the journal entries, right? So entries needs to be taken care of in the accounting system in proper head of income and expenses to get the authorization of the same. Now I'll show you the thing that is called as the voucher, how exactly it is prepared. There's a company logo, the details, the name, date, the particulars, and who has exactly signed this, approved by, prepared by, and received by details have been noted down here. Now let's understand the procedure relating to the petty cash fund and the journal entries relating to the same. See, petty cash fund, first thing that we are going to learn over here is the creation part. And this fund is created by the cash withdrawing from the bank and handing over to the person who maintains the petty cash fund. So in smaller organization, the amount received from the debtor in cash shall also be the part of cash. The entry will go something like this: the petty cash account debit to your bank account, and there'll be some amount that will be involved over here. Then in case of the receipt of the amount, the entry will go something like this: the cash account debit will be amount over here to your data's account. Okay. Now, in case of disbursement, each disbursement is not recorded via journal entry, as there may be much of small amount disbursement for tiny expenditures, like buying a postage stamp instead of journal entry pass at the end of the day or after a particular period of time of the total amount that has been disbursed. So for the payment, the entry will go something like this: the total disbursement will be debited and to the petty cash account. So this is the way the entry will be recorded, and the narration shall also contain the total cash payment breakup. The third entry is going to be the replenishment entry. Now, if the petty cash balance becomes very low, then the petty cash is replenished via a check. So the entry will go something like this: the petty cash account debit to the bank account, and there'll be amounts here. Now we'll try and understand what are the types of the petty cash account types. See, petty cash is basically current asset, and it should be shown in the asset side, right? Under the head of the current asset of the balance sheet. See, the petty cash ledger balance on any point of time cannot be negative. This should be taken care of for all the practical reasons. The negative cash means the cash outflow is actually more than or greater than the cash inflow, which is practically not possible. So the petty cash falls under the most liquid asset organization may have actually. So it's the most liquid one. That's all for now. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.